Hey, what's going on? Jason here, Monday Success and Happiness channel. So, I just want to go over something really quick because it's been in the news lately in the stock market, and I don't know if everybody understands it or just understands the basics. I'm not a pro, I'm not an expert with it or anything, but I've been studying it a little bit, and I just wanted to go over what it means, and that is how the dollar is weakening right now. Okay, so I'm sure some people are saying, like, what does that even mean? You know, is it good? Is it bad? I mean, it sounds bad, right? But you know, it's not all bad. So I'm gonna go over the basics of it and let you guys kind of decide what you think. So yeah, if you like this content, please like and subscribe to my channel, and let's get right into it. So right now, our dollar is a lot weaker than it was before. Okay, let me go ahead and let me pull up the chart for you guys. Let you check it out. So this right here, this is called the US dollar index, the DXY, and what it does is it compares our dollar's strength to a basket of other countries in the world. Okay, and right now I got the yearly chart up right now, and you can see it's 93.56, and as you can see on the year, it's down quite a bit. Okay, it's the lowest it's been all year. And so you're asking, why? You know, what do we do? What happened? And you guys probably know the answer already. Okay, so first of all, it's the Fed. You know, the Feds they're printing tons of money. It's a lot of money, man. You know, they printed I think it's like 5 trillion so far, and we're talking about another stimulus package. That's, you know, another trillion or so. So and then the second big reason is the interest rates are real low right now, and Powell said that he's going to keep the interest rates low at least till 2022. Okay, so that's affecting, you know, when everybody started getting that money, you know, nobody really cared and nobody even thought about this, but there's consequences for doing that stuff, you know, and I kind of already knew that, and you know, a lot of people just were happy to get the checks and everything, but there's definitely consequences, and it's not like horrible, but you know, it does have some effects on our country. So the inflation and the lower interest rates are causing our dollar to weaken. So yeah, what does that mean? You know, what is that going to do? Well, usually what happens is when the dollar's weaker, usually things become more expensive, so stocks go up. So prices will usually, it's correlated like in the opposite direction. So as inflation goes up, you know, as the dollar becomes weaker, stocks go up. That's usually how that happens. And there's also sections of the economy that do better when the dollar is weaker. Okay, so let's look at some of that. The first one I'm going to show you is, this is the VWO. It's Vanguard's Emerging Markets ETF. So when our dollar is weaker, emerging markets are actually more valuable. Okay, so right now is a good time to invest in overseas companies. As you can see here, I got this on the day chart, the 5-day, the 3 months. As you can see, it's you know, it's ascending nicely because our dollar is becoming weaker. So other markets throughout the world are becoming more valuable compared to our dollar. So if you want to diversify a little bit, this is a good time to do it. Another thing that's doing well is commodities. Okay, when our dollar is weaker, commodities are hot. So let's look at this ETF right here. This is a commodity index it's an ETF, and as you can see, 3 months it's been going up. 5 days, 1 day, it's going up because commodities are more valuable. I mean, commodities cost more, you know, when the dollar weakens. So that's another thing you can invest in, you know, on this little trend of the weaker dollar. And another thing is right in the front here, as you can see, gold and silver right up at the top here. Let's look at gold first. Precious metals become more valuable when the dollar's weaker because people run to precious metals. So as you can see on the, let's go on like the year, see the on the yearly chart right here. Look, gold's up to almost 2,000 an ounce now. Just a year ago wasn't even 1,500. Well, that's quite a jump, you know. Let's see, silver too. Silver's been real trendy right now. I just I sold a couple covered calls on silver actually today. So just because how hot silver is lately. And as you can see on the yearly chart, it was $16 an ounce. Now it's all the way up to almost 26. So it is on 26 now. So yeah, so I mean, silver's another one, and these got a little ways to run too. So I think they're going to continue going up in the short term at least. You know, I mean, I don't know for how long, but as the dollar's weaker, and it's probably going to be weaker for a while, so this trend should be going on for a little bit. Yeah, so that's just some of the things that you might want to consider adding to your portfolio in these times right now. And it's going to get worse before it probably gets better. So definitely, if you just have your money sitting in a bank account, you're going to be losing money because your money's just decaying in there. And a lot of people don't want to put their money in bank accounts right now because there's no interest rates. I mean, why is your money in there? You might as well just put it under your bed or something, because you're not making any money on it. You're not. There's like, before, at least the bank rate was a little bit higher, so you can at least get something back from keeping your money in a bank account, But right now, in like the new bonds and the new, in the bank accounts, like savings accounts, you're not getting anything, which is causing a lot of people to invest in the stock market too. So, because you got to keep up with this inflation. And because if you just keep your money in a bank for the next 10 years, you're going to lose a ton of money. So those are some plays that you can profit off of. And another thing too is let me talk about this too is those are like some of the negatives, and how to protect your money. And then some of the positives is when the dollar's weaker, it usually will bring business back to that domestic country. So right now is less people will outsource because the dollar's weaker. So that more people will buy stuff in country, and more jobs will be available in country, and less people will outsource. Because if things are too expensive in that country, you're going to try to look for another country to buy your goods or to outsource your business. So that's a positive spin on when the dollar's weaker, is that people will buy more products and keep more business in that country. So it might boost the economy a little bit in that aspect. And so it's not all that bad. And stocks will go up. I think it sounds good in the short term. So that's about it. So yeah, just my recommendation is start investing in something, because if not, you're going to lose a lot of money. And those are some good options to put some of your money into. You don't have to put all your money in these things, but you can diversify a little bit, and put a little bit in there to be well-rounded. And that's about it. So yeah, if you guys have any questions, let me know, or any comments, go ahead and write them in the suggestions down there in the comments, and let me know what you think. All right, everybody, have a good day. See you later. Bye.